Now, in a major move, the Monetary Policy Committee of the Reserve Bank of India has decided to keep the policy rates unchanged at 6.5% for the 11th consecutive time. And with this, the decision has been passed by a majority of 4-2. The RBI has also maintained its neutral stance, a position that it had revised during the October policy meeting, and this was agreed upon unanimously. Additionally, the Reserve Bank of India has also reduced the cash reserve ratio or CRR from 4.5% to 4%, aimed at enhancing liquidity in the system. And as per Governor Shaktikanta Das, this could perhaps add about 1.16 lakh crore rupees into the system. Now, remember, first let's talk about what CRR is and why it's important. So, CRR is basically, it's a percentage of the total money that banks collect from customers. So, banks collect money in forms of deposits, and they must keep with the RBI in reserve in the form of cash. So, for instance, if CRR is at 4%, this means for every 100 rupee that the bank has, it must keep rupees 4 with the RBI. The bank cannot use this 4 rupees for giving out loans. So, why is this important for you to know? This is one, to make sure that the banks don't lend out all their money and always have enough money for emergencies, and it also helps prevent against systemic risk for the financial institutions. And as we know, financial institutions are the backbone of any economy. So, keeping that CRR or maintaining that CRR becomes crucial for the RBI as well. Another reason why you should know about why CRR is important. This is because it controls how much money is circulating in the economy. So, as I was saying, RBI had previously kept CRR at about 4.5% before cutting it by about 50 basis points. It was maintained at 4%, and this was because 4.5% rather, and this was because to keep inflation in check, because when there is excess liquidity in the system, banks have enough money or enough buffer to lend out, and enough money once excess liquidity is put in the hands of the consumer, they will go out and spend, and that pretty much adds to pricing pressure as well. So, just to run you through what the decision is, again, the RBI has maintained the policy and they have kept rates unchanged at about 6.5%, and this is for the 11th consecutive time. This was also, remember, the 6th policy meet of the Reserve Bank of India in this financial year, and the decision was passed by a majority of 4-2. There are 6 members in MPC, and 4 of them voted in favor of keeping the policy rates unchanged. The RBI has also maintained the stance at neutral, and it was revised during the October policy meeting, and again RBI agreed to keep the policy stance unchanged unanimously. Alright, let's also listen in to what Governor Shaktikanta Das had to say regarding the policy and the rationale behind keeping it unchanged.
Monetary Policy Committee decided by a majority of 4-2 to keep the policy repo rate unchanged at 6.5%.
Alright, we also have a very special guest joining us, Mithali Nikore, founder and chief economist at Nikore Associates. Now, Mithali, thank you for giving us time here on News 9. The RBI's decision is out. The Monetary Policy Committee has held interest rates constant for the 11th consecutive time, and even the stance has been retained at neutral. Now, pretty much the status quo was expected, but anything that surprised you about what Governor Shaktikanta Das had to say?
So I think thank you very much for having me and, for the initial reactions. I think I am definitely a little bit surprised. I did expect, some kind of a rate cut to come through this time because, of course, last time we had a neutral stand. And with the neutral stand, the idea was that when more economic data comes through, there will be more of a decision making from the RBI this time at the MPC, because the idea was that if the GDP data, comes through to be not so, not so high, or if we see a growth deceleration, we will start to see, murmurings around a rate cut. But what surprises me even more about this decision is that it's unanimous. There is no other dissenting actually voice that's coming in to say, oh, we feel that this is the time which is ripe for a rate cut. And we've also seen that, the US has gone in for a massive, deep interest rate cut. So I think somewhere I am definitely a little bit surprised by the continuation of the neutral stand, because we do have, sort of shoots of the economy which are showing that growth is decelerating. GDP growth has decelerated to 5.4% in this quarter. So definitely, I was expecting a rate cut.
Mitali, also, the governor has in fact announced a reduction in CRR, the cash reserve ratio, by about 50 basis points from 4.5% earlier to 4%. And according to him, this will add about 1.16 lakh crore, inject about 1.16 lakh crore of liquidity into the system. And looking at the Q2 GDP numbers, one of the major, spoil sports of it was that consumption was lacking. Do you think that will help the entire picture, and perhaps consumption will pick up with also festive and wedding season around?
No, definitely the wedding season always helps. I mean, that's a big boost to the Indian economy. We've already seen that, the wedding season, the consumption can actually go up by 30 to 35%. But, at the same time, we also look at the fact that CRR reduction was very much on the cards, but we also needed a repo rate, change, and the repo rate stay, being held steady. That basically, determines the rate at which banks are lending to each other. So, for MSMEs, for the business sector, the repo rate remaining unchanged definitely is a little bit of a challenge.
All right, Mitali, I also wanted to touch specifically on, food inflation, because again, that has been the spoil sport as far as the inflation picture is concerned. And again, food inflation has been the problem for the last 2-3 years also, last 2-3 months rather, as well. Now, inflation, in the inflation overall calculation of CPI, it's about 45 to 46%. Now, is food inflation being measured correctly? Because I was reading some commentary from Nilesh, our market veteran. He raised concerns about whether the free food distribution to over 80 crore individuals under Pradhan Mantri Garib Kalyan Ann Yojana is accounted for when measuring food inflation. So what are your views? Is food inflation being measured correctly?
No. I mean, I think this is quite an unfounded, point, and I think the person who is commenting here does not understand the methodology. It's a food inflation, of course, accounts for all of the food production in the country, and then the purchases, and of course the kind of social protection scheme that we are talking about. It is well accounted for in our food inflation estimates. So I don't think the methodology is the challenge. I think the challenge here is about being, more dynamically responsive to the inflation and GDP numbers. At this point in time, our food inflation might be slightly higher, but the overall inflation is very well within the 4% to 6% window, which kind of makes the situation and conditions quite, ripe for an interest rate cut.
That's Mitali Nikore for you. Mitali, thank you for giving us time here on News9. Great insights from you. Great initial first reaction to what the RBI policy means for all of us and, the individuals, and what it could mean for the broader economy as well.